Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Water Interim Report. China Water Affairs Group Limited offers a diverse range of businesses and services across various sectors. The company's main segments include city water supply operation, construction, installation, maintenance, and other services, pipeline direct drinking water supply. Pipeline direct drinking water supply operations, construction, installation, maintenance, and other services, environmental protection, sewage treatment, drainage operation, solid and hazardous waste management, environmental sanitation, and water environment management, main contractor construction. Municipal public construction services, property development and investment, property development, sales, investment, sightseeing area development, water environmental renovation infrastructure provision, urban water treatment business operations, remediation, rural water improvement, and hydropower-related projects. Additionally, the company provides warehousing and storage of oil-related products, trading and distribution of oil-related products. The recent fluctuations in China Water Affairs Group Limited's 855 HK stock price can be attributed to several key events that took place in February 2025. The nationwide implementation of a pilot program for water resource fee reform into tax was a significant factor, resulting in a 4% increase in the company's stock price on February 19, 2025. Additionally, the midterm performance of China Water exceeded expectations, with approved water price adjustments for several projects and initiated pricing adjustment processes in over 20 cities. The company's optimized financial strategy, including reduced capital expenditures and increased dividend payout ratio, also contributed to the positive movement in its stock during this period. These events collectively led to a notable increase in China Water's stock price in early 2025, although it did not reach the mentioned 14.96% increase. The primary drivers of revenue growth or decline in the company's financial performance are multifaceted. On one hand, the decline in revenue can be attributed to the decrease in pipeline direct drinking water supply operations, -12%, and city water supply construction services, -28.2%. Additionally, the optimized development strategy led to a decrease in relevant construction revenue. On the other hand, revenue growth is driven by various segments. The sewage treatment and drainage operations services saw a significant increase of 14.5%, while sales of goods rose by 20%. The pipeline development segment also experienced a notable surge of 26.6% in segment revenue. Furthermore, the company's environmental protection segment witnessed an increase in sewage treatment operation services. Overall, it is clear that the company's financial performance is influenced by multiple factors, making it challenging to pinpoint a single primary driver of revenue growth or decline. The company's operating cash flow status remains uncertain. A review of the financial summary reveals conflicting statements regarding the company's ability to generate positive operating cash flow. Initially, two separate pages indicate a lack of positive operating cash flow. However, another page suggests that the company is indeed generating positive operating cash flow based on provided information. This inconsistency raises questions about the accuracy and reliability of the data presented. The company's debt level and interest expenses have undergone significant changes between 2023 and 2025. While the total debt level has decreased by HK $728.8 million, individual components show mixed trends. Long-term debt and short-term debt have increased, with interest-bearing long-term and short-term debt also rising. Notably, interest expenses have increased by HK $70,300 from $941,119 to $1,011,419. These changes suggest a shift in the company's financial structure, with potential implications for its future performance. The company's financial performance reveals both successes and challenges across various segments. Notably, pipeline direct and property development have been standout performers. Additionally, city water supply and all other combined segments have reported positive profits. In contrast, environmental protection has struggled, indicating areas for improvement. Property main development, while not explicitly mentioned as a loss maker, has relatively low profit margins compared to its peers. Management's outlook on the company. The company has adopted a conservative approach to managing its finances, prioritizing cash and financial prudence. This cautious stance is underpinned by the Hong Kong dollar's peg with the US dollar, which reduces the risk of currency fluctuations. Furthermore, management is committed to upholding good corporate governance standards, aimed at enhancing shareholder value. These strategic decisions reflect a focus on stability and long-term growth. The company has a history of paying dividends, demonstrating its commitment to returning value to shareholders. Specifically, the interim dividend for each ordinary share was set at HK$0.13, providing a clear indication of the company's financial stability and willingness to distribute profits among investors. That concludes the financial summary for China Water. Feel free to comment below, and I will be happy to answer them when possible.